Hello listeners, welcome to Money Talk with Patrick. I am your host Patrick, trading mentor and creator of TC Trading. So in today's episode, I will be talking about the importance of diversifying your income. The pandemic has shown us that sometimes having a job at a company may not be the most reliable form of income. I will explain the difference between active and passive income and how you could potentially diversify yours. Do you want to get notified when my podcast episodes are out? If you have Telegram, look for my channel by searching at Money Talk TCE. That's at Money Talk TCE without any spaces. So hello once again, listeners. How are you today? I'm very glad once again to be discussing more about personal finances and how you can improve your lifestyles. This is the podcast where I talk everything concerning money. We have covered a lot of different things like investing. We have covered personal finances. We have covered more about trading. We have covered about psychology because it's the podcast where you learn how to improve yourself, or you at least learn some of the lessons that I've learned so that potentially you you will not repeat the same mistakes. So I always love doing this, and today we're gonna be talking a little bit about diversifying your income. So I know that a lot of people may already know that even in finance, they say that diversification is kind of like your only free lunch. And that reason is because effectively, if you diversify something, you are reducing the risk while maintaining kind of like the positive expectancy of something happening. I mean, in finance, this is pretty much something that people understand. That's why even if you have like a financial advisor, they most likely will tell you to diversify and not put everything in one basket, right? There is a reason why they say never put your eggs in a single basket. In any case, I want to talk a little bit about the reasons to diversify your income, right? You already know that yes, it reduces risks, but what risks are there? The first one, of course, is losing your job, right? After the pandemic, after what happened, we know that it's a very real possibility. And even though now, if you really think about it, we have more automation, we have more forms, we have potentially robots that can do our jobs, we have potentially calculators or AI or different processes that may reduce a lot of the workload that people may have. It's not the same as it was 50 or maybe even more years ago when companies were just starting, when you had all those factories and you didn't have automation, so you had to have a lot of people coming and just doing manual work. That's not the same case right now. Plus, we are a lot more people right now, so there's a lot more supply in terms of workforce. So this is kind of like a risk that's more realistic right now than it was ever before. Now, another thing, apart from reducing risk, is kind of like achieving income stability. Why? Because some gains can compensate for some losses. Now, you're going to be asking yourself, well, but if I'm earning basically the same every month, how can I get more stable? Well, let's think about two scenarios. Scenario one, you lost your full-time job, as we described before. And this is where if you have kind of like a side hustle, it doesn't matter whatever you like, if it's e-commerce, I'm going to be talking more about different types of side income. But the point is that if you lose your full-time job, at least you have that income from that side hustle, which is going to be very helpful in that scenario. And again, I already talked about how to have your personal finances kind of like in check, with this emergency fund. So you should be kind of aiming to prepare yourself for the worst case scenario, right? Because if that happens, at least you're gonna be kind of like in a better position to tackle the problems that happen. Now, scenario two, it's the other way around. Let's think that you have a side hustle and it's not working and you are actually investing money in it. Well, then at least you have a stable job that pays the bill. So this is the other way around, right? Now, the good thing about kind of like having a side hustle is that you can increase the income potential of your overall income, talking about your about first job or your main job, let's call it like that, plus all the side hustles. And the reason is because secondary streams of income can become bigger and bigger, or at the very least let you save more. So it's not the same, having your salary, whichever it is, per month, than having extra $100, than having extra 200, 300. Maybe you reinvest that, maybe you are compounding that, so in the end it's like 500 extra per month. So that can be achieved. Of course, you have to work a little bit to get that into that state, but it is totally feasible. Now, there's of course two important types of incomes. It's the active income and the passive income. I have talked about this before in my channel like a long time ago, but I wanted to kind of like bring it back and bring it to the podcast because it's important, and there's a lot of misconceptions between one and the other. Now, active income, as you will kind of like understand, refers to income received for performing a service, for being active, basically. If you are selling your time and you're getting money for your time, that's active. It doesn't really matter what are you doing. We're talking about basically wages. We're talking about tips. If you are working at a restaurant, you are doing something active to receive some kind of income. We're talking about salaries. We're talking about commissions. If you're trying to sell something, you are actively trying to sell that to get that commission. So basically anything that requires material participation. Now, there's some positives, there's some negatives. The positives is that you can always make more money, right? You can always work a little bit more. You can always have like a part-time job, or one or maybe two jobs. But of course, the negative is very, very obvious in this case, because you directly trade your time for money. So there's a limited amount of time that you have per day. And if you take into consideration taking care of yourself, which you should, and I've always advocate for trying your best to keep your psychology as best as possible, and and being in the best of mindsets if possible. You have to sleep, you have to eat, you have to, I don't know, shower. You have to spend some time of your day doing things for you that you're not gonna be able to monetize that. And this is where passive income comes into play. Now, passive income is that income that requires no effort to earn and maintain. And this is, I always try to bring the normal or the most common definition, but in reality this is kind of like a misconception, because it says it requires no effort, which is definitely a misconception, because passive incomes require a substantial initial effort with potential, and it brings potential for a long-term payout. So if you want to do whatever you want as a side hustle, you are gonna be spending a lot of time, and I mean a lot of time initially, until that's set up, and then there you go. Well, this is of course unless maybe you are already you have already a lot of savings. Maybe you are actually buying a business, a franchise. Well, then this is gonna be a little bit different. But in essence, you usually have to do some kind of effort at the very least. Now, most common forms of passive income, the most common that you will hear about is rental properties, owning a business, investing in gains, and so on. But the reality is that some of these are potentially not kind of like doable for a lot of people, right? I'm gonna be talking about that in a second, but let's talk about the positives and the negatives again, just as the active income. So positives: it can free you up your time in your schedule, as it usually requires less effort to maintain. And the key here is less effort to maintain, not to create, right? You create a business, you spend a lot of time, a lot of money potentially in creating that business, and then, maintaining it is gonna be a little bit easier. Now, the negatives, of course, is the initial setup might require a big initial investment of time and or money, which you may not have. Now, let's talk about potential diversification ideas. Now, it is easy to say, create a business, rent property, or give general ideas. I know it is, because you have heard this a lot. And I was thinking, okay, what are kind of like more grounded solutions? We're not thinking about you creating the next Amazon. We're not thinking about you creating $100,000 per year just yet, an idea, because that takes a lot of work. And it's good that it takes a lot of work, because it gives you a big payout in the end. But you want something that is really adjustable to your current situation. So more grounded solutions might be, maybe you own a house. Maybe you are paying a mortgage, maybe you are living in a new place, and you can rent one room. Maybe you can sublet one room. Maybe you are renting a house or an apartment with 2 rooms, and you can rent one. And that's kind of like maybe it's not completely a side business, but that's an extra money that's going to help you pay that mortgage. That's extra money that maybe you can be saving per month, right, that you didn't have before. Let's talk about side but scalable businesses. You have heard about drop shipping, potentially you have heard about e-commerce, you have heard about trading, and the reality is that these kind of businesses, yes, they take a lot of time initially, to learn, to know the insights and everything, but you can treat them as something quite small. You don't really have to scale them up and consume all of your time. Maybe you can do that. I have some friends that definitely went that way. So they were working a full-time job, then they created their e-commerce store, then that income was becoming very substantial, so they decided to leave their 9 to 5 jobs to go fully into this. I already have a podcast episode with one of them, so you should check that out. I think it was named something in between how to leave your 9 to 5 job. In any case, if you work on your personal brand on social media, you can also consider having sponsors. You are working to create this creative content, like YouTube videos, podcasts, etc. You can always have some sponsors. Again, which you need to work a lot of that, but a lot of this comes because you want to create something else, right? It's because you actually want to do it, not because you actually have to do it. Because if you have to do it, potentially you are just gonna stick with your 9 to 5 job. And this also works, what I just said regarding, your social media, your personal brand. This also works for referrals, because you can refer certain products to other people and you will get a commission out of it, which is something that a lot of people, including those influencers, that a lot of people might hate, because they know that they make a lot of money, but potentially they don't create something new, or they don't do something, they're not creating a product or anything. They are in a lot of times making drama in social media, but the point is that drama attracts people, and those people will be attracted to certain kind of like products, and that's where they make money. So you can't really blame them for just taking advantage of the opportunity that's lying just in front of them. In any case, to summarize this, the objective. What is the objective? First of all, to find an equilibrium between both active and passive incomes, right? You don't want to spend the entirety of your time just working at 9 to 5 or even extra hours. You don't want that. But also, potentially, you don't want everything to be passive, because maybe you want to be focusing on growing something. And if you want to scale your business, well, you have to involve some active work into it. You cannot be like, I'm going to sit around and I'm going to expect everything to just get better, right? Another objective, start saving with active income and slowly invest into passive income. This is kind of like what you want to do. This is one way to get out of this kind of like quote unquote rat race, which I will be talking about in another episode. It's basically just use your main income, try to save, create passive income, create more income, rinse and repeat. You want to funnel the earnings into your own business, into your own side hustle, and scale your passive income. That's what you want to do. Scale it more and more. But of course, this is a combination of active income plus passive income. In any case, traders and listeners, I hope you enjoyed this episode of Money Talk with Patrick. Understanding the difference between active and passive income will help you create a plan that you can follow to achieve your financial goals. Remember that diversification always brings positive advantages, so do not underestimate taking some off time and follow a side hustle of yours. Thank you very much for listening, and I will see you in the next episode. Take care.